Hi, my name is Eileen Mostricht, and today I wanted to talk about the QMB program. This is a Medicaid program other than the long-term care program that I've been talking about in prior videos. This is one of the Medicare savings programs, and it is for people who are on Medicare but are lower income and may need a little bit of extra help during the month to make ends meet. So what qualifying for the QMB program will get you is Medicaid will now pay your Medicare Part B premium. Your Medicare Part B premium gets taken out of your Social Security check before you get that check. Right now it's $174 a month. That's going up in 2025. So if you're on this program, Medicaid will pay that. Also, Medicaid will pay all of your out-of-pockets and any out-of-pockets and co-pays that you have for your medical care. So that can be a huge help. And then also it will serve as a backup for health insurance. So anything, you'll always have your Medicare for your health insurance, but the QMB program will then become your backup. So then you could be like Medicare, Medicaid, and that can be a big benefit to a lot of people. The financial requirements for this program are that your income, and this changes every year, but right now it's about $1,255 a month that you can have as income, and about $9,400 in assets, countable assets. There are assets that are not countable, such as your homestead and retirement accounts. With this program, if your assets are over that threshold of $9,400, you can transfer assets and there is no penalty. That's not true with the long-term care program. Assets have to be only transferred with allowable tools that they give us, but with this program, there's no penalty, you can transfer them. However, you want to be careful about that, because if you think that you might need Medicaid for long-term care within the next 5 years, then you want to be careful of those transfers, because then they will count in that 5-year look back. So it's a discussion that we would have and decide what was the best thing to do. We could always implement the long-term care tools now in doing transfers if you needed to get some assets out of your name in order to qualify for this program. For the income though, if your income is over $1,255 a month, then the only real option for that with the QMB program is something called a pooled trust. And I talked about that in another video, but basically what that is, it's a tool that we can use in the long-term care program as well. But for the QMB program, we specifically would use it. It is the option for excess income. And with the QMB program, with the pooled trust, we help you. We facilitate, help you join this pooled trust, which is a trust that already exists and is run by trustees. And then you would send your excess income, so it would be your income that's over $1,255 a month. You would either wire it or send it by check to the pooled trust every month, and then they would keep that. You essentially have your own account, and then you can spend the money. You don't lose the spendability of it. However, you have to email them a payment request form and an invoice for whatever you want paid, and then they will send the check right away. So I often suggest, if people are on this program or using the pool trust, put your expenses on a credit card, and then at the end of the month or whatever day works out after you receive your income and you've transferred over the excess, whatever it is, you would email the invoice for your credit card statement and a payment request form over to the pool trust, and then they'll send a check to your credit card company. So you don't lose the spendability of it, you just have to take a couple extra steps to spend it. But this is an option that can help a lot of seniors who are lower income get a little extra boost.